Yo guys, welcome back to Stock Talk Insider. Today we'll be talking about the Honest company. So the Honest company is co-founded by Jessica Alba in 2011. It has grown from a celebrity-backed startup into a publicly traded brand in a highly competitive clean products market. After years of financial pressure and limited growth, the company is now undergoing a major turnaround under new leadership. Today we'll dive into Honest's journey, its challenges, and why it could be one of the most overlooked growth opportunities in the consumer products and actually maybe market. So yeah. It's founded in 2011, as I said before, by the actress and entrepreneur Jessica Alba, who was motivated by the lack of safe and non-toxic baby products. Honest's mission is to provide clean, safe, and eco-conscious products without sacrificing style or accessibility. Products expansion, so we have baby care to personal care to cosmetics to household cleaning. At this point. So we started with the baby care, we expanded to personal care, we even got further into cosmetics, which is a very big one. Actually, personal care and cosmetics is very big if they can grow that very good. And we also have the household cleaning, which is the last one that came to the company. So some early momentum is that backed by strong celebrity branding and consumer shift toward health conscious, toxin-free living. By 2013, revenue hit around $50 million, showing strong demand in early days. However, Honest faced criticism and lawsuits over labeling and product claims, including sunscreen complaints around 2015. At the same time, many competitors faced major lawsuits to toxic or harmful ingredients. Honest managed to avoid these damaging safety scandals, maintaining credibility with families seeking trust and transparency. So they already proved that they can go stuff like that and that they are a very mature company if you just look at their backbone in how they operate. And that was still with the old board. We aren't even at the new board yet, so that's a very big difference also. So some quality perception versus safety. Consumers occasionally complain about performance issues, for example, diapers being less absorbent or sunscreen not as strong as expected. Importantly, these issues were about effectiveness, not safety, which is a very big difference because safety is much worse if that's a problem. Where competitors often deal with lawsuits over toxins, Honest remains associated with trust in clean ingredients, which is positive. This subtle but crucial difference positions Honest as the safe choice on the market, even if it sometimes sacrifices performance versus chemical heavy alternatives. So what do I mean by that is that the expiry date can be way sooner than we have with some other products that are filled with chemicals to last longer. So the expiry date will be sooner than normal. We also had some financial pressure and leadership change. So for years, Honest struggled with profitability. Marketing spend was limited as the company was forced to prioritize survival over growth, which is a very big problem for a company because if a company wants to grow, but they can't grow because they just have to prioritize more on survival and on their numbers to keep the numbers as steady as possible and not as growing. So that was a big thing. Expansion was slow because resources were stretched thin. In January 2023, there was a big change. Carla Vernón became CEO, the first Afro-Latina CEO of public traded US companies. Vernón brought experience from Amazon and General Mills, where she specialized in operations and consumer brands. So she already had a lot of experience in the field that they was actually started to be CEO of. So with her coming into the story, we had the turnaround plan. So Vernon's strategy has been very clear, and these are the 4 points. Number 1 is streamline operations. So we cut 25% of underperforming SKUs. Improve supply chain efficiency, so higher gross margin. Strengthen retail presence in Walmart, Target, and Amazon. prioritize operating income and margin improvement before scaling revenue in growth up. This turnaround reflects a deliberated choice: optimize first, grow later. Some key point to take away is that revenue is slightly flat/up now. You can say that it's just flat, but that's intentional. Once process and margins are locked in, growth will accelerate on solid foundations. But first, the foundations have to be solid. So, having said that, we do want to know what is actually the financial performance at this point. So, taking just the Q2 2025, we have a revenue of $93.5 million, which was around almost plus 1% up year over year, which is, as I said before, slightly up, slightly flat. Net income was $4 million, a swing of plus $8 million year over year from a loss. So last year that was a loss, and now we are up. So we are up $4 million. Last year we were down $4 million. Gross margin is 40.4%, so that's up 210 basis points. 40% margins in gross margins, that's becoming very strong. I do believe that we will keep between the 40%. Will not go too much higher than that, I think. And if so, that would be very positive catalyst for the stock. Market cap is only $500 million, with nearly $100 million revenue per quarter at this point. Valuation looks compressed versus peers, so there may not be there may not be a lot of growth at this point. But to be fair, $100 million revenue each quarter, also being profitable at this point, and a big turnaround catalyst. Plus, we are only a market cap of $500 million. That deserves of a little bit more of a higher stock price, to around $5 at least for me, I think. So that's one price target we can already drop out. That can be expected, in my opinion. CEO Vernón emphasizes profit discipline, efficient use of operating income, and margin strength. So going to the strategic opportunities at this point is that Honest is well positioned in a growing $100 billion global clean products market, and these are its future growth drivers. So expansion into adjacent categories, which are organic baby food and beauty. With e-commerce and subscriptions for recurring revenue. We have growing consumer preference for safe, toxin-free products. That's also something that's that's also something where a lot of attention goes to in the newer generations. That it all has to be safe and free of toxic stuff, and all of those things. With consumers now able to use AI and databases to fact check ingredients, transparency is more valuable than ever. Honest benefits directly from this trend. So this is also a way to look at how you can work with AI. If you are very honest, as honest is as honest as the name of honest, then you can be very positive in growing for people who look it up on ChatGPT or something. Despite being pushed to the sidelines, Honest has survived and now is executing a disciplined turnaround. But just to be very, very clear, we just started becoming profitable, and we just started the actual turnaround. So $100 million quarterly revenue versus $500 million in the whole market cap. Major undervaluation, in my opinion. Loyal audience plus expanding clean living trend, secular growth driver. New CEO Vernón has improved margins and profitability, building a foundation for long-term scaling. Honest reputation for safety differentiates it from competitors who face safety lawsuits. With operations on track, revenue growth will follow, making Honest an overlooked but compelling turnaround play. Taking all of this in a closing statement is the following. So, by the way, this is the stock at this point. We are a little bit on the more recent consolidation. So we had a breakout at around the end of last year. So around 8 months ago. Since then, we have been dropping with a little pullback up, and then we have a pullback down again, and now we are here actually. So we are at around $4. I do believe that this is a very strong line that should be non-breakable in my opinion. If you look at all of the numbers, all right, the only negative thing about earnings is that there was not really a growth, but in its whole, the earnings were very, very strong and very, how do you say it, very fundamentally correct. But if you look at the blue line, we have at 3.96, yes, that's the price where the last down was over here. You can maybe even take the one over here, which is around, yeah, the same. It's just such small of a stock price that it's around the same. So around 3.96 is actually the price that would have to be broken. If you look at it, yes. Oh no, I'm very wrong. Sorry, I'm very wrong. 3.5 actually, so 3.49. That's the stock price that it should drop to if they want to break the resistance over the last 10 months. I do believe that that will not happen, and we will go up because we will maybe go a little bit up and down until we reach a further consolidation until earnings. Earnings will be a beat and we'll just go up to around 6 or 7 even, maybe. I think it's very possible. So of course not the day after, but in the coming weeks after earnings, we can go to 5, 6 and even 7, and then we are just at the more price that we are more at the price that we should be, in my opinion, having the turnaround play, the market cap versus the revenues each quarter. So yeah, that's a bit of what I take, and also the catalyst of being positive right now in net income. So yeah, having the closing, the Honest Company is a story of resilience. After years of financial struggle and cautious growth, new leadership has refocused the business on profitability and operational excellence. With nearly $100 million in quarterly revenue, strong consumer trust, and a market cap of just $500 million, Honest may be one of the most overlooked turnaround opportunities in consumer goods today. So having said that, I want to thank you for watching this video, and I'll see you guys later. Bye bye.